Off-plan projects are properties sold while it is still being built. That is, property that are sold while the construction work is still going on. There are so many places in Nigeria, particularly in Lagos and Abuja, where you can find off-plan projects. In Lagos, for instance, places like Abijo GRA, Ekate, Lekki Phase 1, Lekki Scheme 2, Sangote Edo, and so on and so forth. You can always find off-plan projects there. And in Abuja, places like Guaripa, Gogalada, Airport Road, and so on and so forth, you can find an off-plan project there. What are the advantages of off-plan project? Off-plan properties usually give you ability to see the level of construction and the nature of material being used in that construction process. It also enables you to buy below the market price and also gives you a flexible payment plan. These are some of the advantages of off-plan project. Hello smart investors, we are coming across this channel for the first time. This is Real Estate Made Easy, a YouTube channel of Berkeley Consult Nigeria Limited. This is where we educate you, we inform you, and we enlighten you, giving you pro tips about real estate investment so that you can avoid costly mistakes other people are making. So if you are yet to subscribe to this channel, kindly do that right away, and of course turn on the notification bell so you do not miss any of our subsequent videos. And if you have missed our previous video, do good by going through our playlist and of course enlighten yourself about some of the important tips you need to know about property investment. We have a number of beautiful topics we have earlier covered. So let's get down into today's business. 5 risks you must know before buying an off-plan project. Number 1, delivery. Delivery is very important because after making your full payment, what you are expected to get is the delivery of the product you are paid for. Now, many people have paid for property and they could not even see the property they paid for. I believe you do not want to be in that shoe. Delivery can be late. If you might not even get delivery of the property you are paid for based on some conditions, such as the company itself is not reputable and so does not even have the wherewithal to deliver the products. 2, it might be as a result of change in the cost of building material, unexpected change in the cost of building material, or the consistent increase in the foreign exchange rate, that is dollar versus naira. This alone could cause a lot of setback to some developers as well as real estate companies. So you must understand that. Now, the pro tip to that is simple. Make sure you carry out a background check on the property developer or the real estate company you want to transact with. Have they done a similar project before? Have they delivered the product as at where they want to deliver? It's important you are very sure about this so that will guide you whether the one you want to transact with them, you are likely going to get allocation for it or you are not going to get an allocation. So you must verify that. Another pro tip on the delivery period is that check the delivery time, go through the contract of sale of that property as well as the FAQ. FAQ means frequently asked question of the property you want to subscribe to. Check through and to see the time that they are supposed to deliver to you. Also check through the procure of that property and be sure that the company have delivered something like that before, or you have physical product that they have delivered. That will go to help. So make sure that you check the delivery time, the delivery schedule of the property you want to buy, and you have carried out the background check about the company who is promising you to deliver the product to you, so that you'll be sure that they have the ability to deliver the product and that they have done similar projects, so that your project will not be an experiment that they just want to use for litmus test. You must be very sure that the company has the ability to deliver the product that you are subscribing to. Otherwise, you may only be paying and you will not get access or a physical allocation to that property. On the delivery time, some property that are off-plan projects are usually delivered within 12 months, some 9 months. So you must be sure that from the time you have completed your payment, and some company will tell you that until you meet up 70% or 50% of the cost of that building before they start your own building, that is before they even show you where they are bidding for you. So you must know that the payment plan that is suitable for you to actually go for, and be sure that the company is going to deliver as at that duration they have promised. Some people will deliver between 9 months, 12 months, or 24 months. So you must know which of the delivery time are you subscribing to. And ideally also, as a pro tip, give yourself an additional 3 to 6 months in case the company did not deliver as at 9 months they want to deliver. And when you are giving them 3 months extra within yourself or 6 months within yourself, you will not be too disappointed if they delay in delivery of your product to you. So for an off-plan project, like I told you, because of unforeseen circumstances, there may be delay in delivery. So be sure that anytime the property developer or the estate company you want to transact with is giving you, at the back of your mind, just add 3 months to 6 months to that delivery period. Number 2, quality. The quality of your off-plan project is directly proportional to your return on investment. So you must be sure that you are subscribing to a product that is of supreme quality. So you need to be sure that that property you want to buy has the right quality to give you your desired return on investment. Now, how are you going to be sure of this? Like I told you earlier on, make sure you check the book of that property. Check the floor plan. The floor plan will enable you to know the size of the property that will be allocated to you, and also will enable you to know the space and what have you. So make sure that the quality of the product you want to buy is superior and it meets your desired taste. Again, be sure that you are familiar with the kind of the property that you will also be get with the property developer giving you a carcass, or they will be giving you a semi-finished product, or a finished product, or a furnished product. So you must know which kind of product you are subscribing to and what do you expect in return. Because if your desire is to actually have a finished product, and then the company, after you are paid huge amount of money, is giving you a carcass or even a semi-finished product, you know you will not be happy about that. So be sure that the property you are subscribing to meets your desired expectation. Number 3, interest or extra charges. You see, when you are subscribing to an off-plan product, usually some companies consider 0 to 3 months as outright payments. Some consider 0 to 6 months as outright payment. So any payment beyond what the company has described as outright payment usually fall into what is known as instrumental payment. And when you make an installment payment, there are usually extra charges you are supposed to pay other than the normal price. For instance, if an off-plan project costs, let's say, 40 million naira for outright payment, be it 3 month outright payment or 6 months outright payment. If you are subscribing to 9-month payment plan or 12-month payment plan, for 9-month payment plan for a property that costs, let's say, 40 million naira for an outright, you might be asked to pay 42 million naira for 9-month payment plan. And if you are subscribing for 12-month payment plan, you might be asked to pay 45 million naira. So the extra 2 million and 5 million naira are the extra charges as a result of the fact that you are subscribing to an installment payment. So if you are subscribing to an off-plan project, you should know from the beginning the payment structure you want to subscribe into, as well as the extra charges that you might be charged if you do not pay within the allotted time you are supposed to pay. Because for every delay you have in your payment, the company may penalize you for that. So it's important that you go through the company's book here, check through the FAQ, frequently asked questions, as well as terms and conditions to be sure. Number 4, refund. Of course, life happens. Perhaps you have subscribed into a product when you have believed that you'll be able to meet up with the payment structure and the time you have decided to pay. But because of unforeseen circumstances, you might be having one delay or the other, so you may want to pull out of the transaction. So it is ideal that before you even subscribe at all, understand the refund policy, that this developer give you the ability to pull out when you want to pull out, or with this SA company give you the ability to pull out when you want to pull out. Perhaps the circumstances beyond your own expectation. During the time of COVID-19, for instance, many people that were even well paid, some lost their job, some could not even retain their monthly payment as well. So if they have made some obligation towards an off-plan project, definitely that might affect their payment schedule. And of course, some of them may even actually want to pull out so that at least life first, want to save their life and save their family first, even before considering into investment in real estate. If you want to pull out, you must understand the terms and conditions responsible for pulling out. So once you understand this clearly before you make your subscription, it will serve as a guide to you and you know what to do when you want to pull out. Pro tips on refund is that before you sign that subscription form given to you to subscribe to that estate, as well as the FAQ or the contract of sales given to you, ensure that you understand the terms and conditions for refund, because some company will penalize you for seeking refund, and the penalty at times could be up to 35% of whatever amount you have paid towards that construction. And some will also even tell you that you have to wait till about 9 months or 3 months before they can pay you. Some will tell you that until this sold again to another person, or you bring another buyer to buy the same property before you can get your refund. So you must understand what are the terms and conditions that warrant refund. And so you must be sure and be clear before you make that subscription that yes, you are clear with these terms and conditions regarding refund and you are good to go. Otherwise, if you do not understand this and you subscribe, when the need for refund arises, you might be pained when you see some of these terms and conditions that you have to follow. Number 5, Return on investment. Of course, as a smart investor, your objective for investing to an upfront project as an investor is to maximize profit. You want to ensure that you have a good return on investment, whether you are giving it out for short let or you are giving it out for renter, or you even want to resell the property when it is delivered to you. So your return on investment is very important to you. That is well understood. And of course, upfront project gives you a good return on investment because you are buying below the market value and you are selling where the property has attained a good market value. That is, you are selling after the product is delivered to you. By that time, so many things would have taken place and the property, of course, would have appreciated in value. That's why you're going to make so huge amount of money in terms of return on investment. However, the number of factors can affect your return on investment, such as poor quality or bad quality in terms of the building materials. If the upfront product you subscribe to does not have good quality, the nature of material used in building it are very poor, then you may have to spend huge amount of money renovating and then doing some extra work. That of course will affect your return on investment, because when you subtract your capital from the expected sales price, you realize that you may not get the expected return on investment you are earlier budgeted. Again, if your upfront project also does not meet the required standard you have expected, it will also affect your return on investment. Other factors that can affect your return on investment include poor finishing. If the property you are subscribing to does not have a nice finishing, of course it will not attract your expected customers, and of course you might be selling it below the expected market value, so that will affect it. Default in payment also, the penalty you have paid for default in payment will also affect your return on investment, because those extra charges that you have been charged because you didn't pay as when you're supposed to pay. So if you have paid a number of penalties because you defaulted in payment plan and all of that, when you calculate all this together, you realize that it will also affect your return on investment. So I hope you understand the 5 risks you must know when you are buying an upfront project in Nigeria. So if you have actually gained from this episode, thank you so much for staying tuned, and I hope you have learned one thing or the other. And if you are yet to subscribe to this channel, can you do so right away? And of course, turn on the notification bell so that you will not miss our subsequent episode. I remain your award-winning property advisor, property consultant, Bello Kamaldeen. Thank you.